Okay, just give me a thumbs up in the chat if you can see my screen. That will be great. Okay, great. Okay, so let's talk about Bitcoin first because Bitcoin has made some move. So what Bitcoin did is basically it went above $44,000, moved up. Okay, touched around $45,000. You can see, and then it came back down till $40,000. Okay, and right now it's hovering around $43,640. Okay, so what I'm trying to say is basically this Bitcoin is moving in a channel. Remember? Okay, let me show you. Let me show you. Okay. You see this channel? Okay, I told you this is trading setup 03. If you guys remember, I hope you remember this topic. I talked about trading setup 03 in one of the classes, and I told you you always draw. I mean, instead of a horizontal trend line, you draw a zone, support and resistance. Okay. Let me see if you can see me. Okay, now you can see me. Okay. So what I'm trying to tell you that in this trading setup 03, I mentioned that instead of drawing a horizontal trend line, you must draw a horizontal zone. Now that zone is, of course, one is going to be a resistance zone and the other one is going to be a support zone. Okay. And the market will move between these two particular zone. Okay. And the same thing is happening right now on Bitcoin. The market is moving between these two zones. Of course, here you can say, but yes, the market went above, but you can clearly see even if it went above, it came back down, touched the previous support level, and now it's again moving up. Okay, so this is what we call a zone. A zone is typically like this. And I also told you that it's very hard to trade this kind of zone. Okay, why? Because if you just draw a trend line, if you just draw a single line, it will be very hard for you. Okay, if you draw a zone, then of course you can take a trade. Okay, but always take a trade after the U-turn. I have also mentioned this topic, right? Always take a trade after the U-turn, right? So here, if you wanted to take a trade, so you must wait for the U-turn and then you must enter after the U-turn. Okay, and in this case, to see, as I said, there was no U-turn, right? There was no U-turn. Okay, the U-turn came after this point. So once the market entered again into the zone, then you could have entered. Of course, I mean, I did not took this trade. I was traveling, so I mean, yesterday only I saw this drop actually in the evening when I was in car. Okay, but yeah, so that's why I did not take the trade. But yeah, the concept does make a sense. Okay, and let me just give you a recap little bit. So this we talked about, and we also talked about long position, but basically means uptrend channel trade. Okay, downward channel trade, trading setup 05. Then we talked about 20-day moving average. Okay, and 20-week moving average. I think we talked about a little bit about that. Now today what we will do is we will again talk about the 20-day moving average itself. Okay, great. Now let me remove everything from the screen. Okay, so this is our chart. I am using a 1 hour chart. Okay, just devising it to you again. I am using a 1 hour chart, 1 hour time interval. This is a Bitcoin chart. I am using tradingview.com. Okay, and this is a super chart. I mean, even if you go on TradingView, it will show you a super chart option. So this is a super chart. Okay. Now I will show you how to put an indicator. I think I have already mentioned this particular thing in the previous class, but again, let me revise it to you. Okay, so how to put a 20-day moving average? Okay, what we need is a 20-day moving average. Okay, 20 is the length, day is a time interval. Two variables, length and time interval. 20 is a length, day is a time interval. Okay, great. So I can simply click on indicators. If I click on indicators, then I should go to technicals. From here, I should write moving average. Okay, and this is a moving average simple. we need a simple moving average. Okay, so we are going to choose the third option. Actually, this is right here, you will see, because it's already in my favorites. That's why it's showing right here. But you see in this one, it's an average, moving average simple. So if I click on it, automatically you will see a blue line has added on your screen. You see this blue line? That's a moving average. Okay. This blue line is a moving average. Let me just zoom in a little bit. Okay. Now on the top left corner, you see this SMA 9, load 0, SMA 5. Okay. We have three different options here. The first one is basically to hide it. Okay. Or to show the line, as you can clearly see. Very simple. If I click on it, it will hide. If I again click on the same option, it will show. The second option is settings. So of course I need setting option. Okay. So if I click on setting option, it will show me different things. As I said, we need to change the length. Okay. So now the length is 9. What we need to do? We need to make it 20. Okay. So again, what I will do is I will just rise it up till 20. Okay. Then I need a time frame, time interval. Both things are same. Okay. So I need a time interval or time frame, whatever you can say. Okay. That time interval or time frame has to be a day. It has to be a day chart. So again, I go right here. I change this time frame from chart to 1 day. Okay. That's it. Done. Now I can change the style. So in a style, if I go, I can change the color of it. You can see I can easily change the color. Okay. So I am choosing blue. I like blue color on the screen. Okay, and I can make it a little bit thicker. So that's great. Okay. So if I do something like this, now you can clearly see. Correct? Okay. You can clearly see this blue line is a 20 moving average. 20 simple moving average is this blue line. Okay. Great. Now in the previous class, I did mention you one thing. Okay. Right now we are talking about an indicator. I might be repeating myself because it's been a long time till we have a class. Okay. So about indicators, let me just repeat myself again. Indicators are not strategy. You should never buy or sell based on an indicator. Okay. So indicators is basically moving average is an indicator, MACD is an indicator, RSI is an indicator. Like all these things are an indicators. Okay. So indicators are not strategy. Okay. They are only 20% part of the setup. This strategy is what we call 80%. Strategy has a weightage of 80% in any kind of setup. Strategy is what? When to enter, when to exit, when to put a stop loss. That three topics, that three core points, that is the strategy. Okay. Indicators are just 20% part. Remember this part. Okay. Indicators are just 20% part of your trading setup. Okay. Now, what kind of information we are getting by using indicators? Okay. Indicators provide us information which we can't see from our naked eye. If I remove or if I don't put anything on this chart, okay, then of course I can see some support and resistance, some trend line that I can see that. Of course we can do. Okay. But there is still something which is hidden and which I can't see from my naked eyes. And that's why we need indicators. Okay. So indicators provide us information which we can't see from our naked eyes. Okay? That's why we use indicators in simple words. Correct? But you should never buy and sell based on a single indicator or based on a bunch of indicators. Okay? I hope everyone got this part. Now let's move here. Now from just focus on this class again. We in the 40 next, I mean, this is the core thing. That's why just focus on it. Now, what kind of information we can get by using a moving average? What kind of information we can get by using a simple moving average? Okay. So go to, I mean, if you have time after this class, go to the previous recording and watch it. You will find it in a very elaborate way. Okay, but in a short way is basically, see, if the market is above the 20-day moving average, then we are bullish about the market. Okay, we are bullish about the market. Okay, and when the market is below the 20-day moving average, then we are bearish about the market. Okay, that means if the market is above the 20-day moving average, we become bullish. That means the sentiment of the market or the sentiment of the traders are bullish. Okay, if the Bitcoin price is above the 20-day moving average, that means the sentiment of the market is bullish. Everyone wants to buy. That means, okay, if the price of Bitcoin is below the 20-day moving average, then the sentiment of the market is bearish. That means everyone want to sell. That's it. Okay. Now, depending on that, can we create a chart or can we create a table? Can we create a table on which we can say that, okay, if this happens, then we have to take a long position. If that or the other situation happens, then we have to take a short position. Okay, long or short position, basically we have only two positions. Okay, can we create something? Can we create a logic around it? Okay, so it becomes easier for us. That's very easy. I mean, see, if you take a right now, if I say, okay, if BTC is above the 20-day moving average, then what kind of position you should take? Okay, most of you will say a long position. Yeah, okay, because we are bullish. Okay, but if I tell you that, okay, what if the market is in the bearish, in the fourth phase? If the market is in the fourth phase, but the price of BTC is above the 20-day moving average, something like this. Okay, let me show you the example. Okay, the market is in the fourth phase, so the market is moving down, correct? But the price of Bitcoin is right here. And you can only see this chart, right? I mean, just to make you sure, you can only see this much. This is what you are seeing. Now what you should do? You should take a long position or short position. Or you should not take any position. Yeah. Short position, because I mean, I got an answer, short position. Short position, you are saying it because you already know where the market is moving. But if you are at this point of time, you will be in confusion. Okay. And whenever you are in confusion, you should not take any kind of position. You should wait for the market to go down again, and then you should take a short position. Okay. You are saying at this point short position because you already know where the market is heading. That's why you are saying. But at this point of time in the real life scenario, we don't. I mean, even I am in confusion at this point of time. Okay? But yeah. So let's create a table by using which everything becomes simpler for us. Okay, and I will be asking questions. So of course, be ready to give answers. Okay. Great. Uh, just 1 second. Okay. So let's make 3 different tables. 1, 2, and 3. Okay, let's see. Okay. So this is moving average, or let's say not moving average, let's say market phases. Market phases, okay. And this is your 20-day moving average. Okay. And this is your trade position. So now in trade position, we have only two positions, long and short. Okay, so trade position. This is a very important topic, so please keep your focus on it. Okay, and let me draw some. This 1, 2, 3, 4, 5, and 6. We almost have. I mean, almost every time you will be in one of the 6 scenarios actually. Okay, so yeah. So in second or in third phase, in second and third phase, what happens? Generally, the market moves in the upward direction. Okay, the market is in the bullish territory. Okay, so in this phase, remember we are in second or in third phase, correct? And in this phase, the price of Bitcoin, this is only about Bitcoin. When I use a 20-day moving average, we only use it on Bitcoin. Okay, so the price of Bitcoin is greater than 20. 1 second. 20-day. I mean, now we have these two things. Tell me what kind of position I should take, long or short. Tell me. We are in second or in third position, third market phase, sorry. The price of BTC is greater than 20-day moving average. I got one answer. I will wait for one more. Okay. Do we have our people here? So, yeah, we do have people. Anyone? What do you think? What kind of position we should take? RVSJM. I mean, oh, sorry, I don't know how to pronounce it. RevGym, maybe. Can you tell me what kind of position you will be taking or you should take when we are in the second or in the third phase? The market is in the second or the third phase, and the price of Bitcoin is greater than 20-day moving average. Okay, no worries. See, if the market is bullish, correct? So here what we are getting in news, we are getting that okay, the market or it will move up, right? Because we are in the second or the third phase. And if the price is already greater than 20-day moving average, yeah, okay, great. So if the price is already above the 20-day moving average, that is also a bullish sign. So bullish sign plus bullish sign gives us a logic that okay, we should take a bullish or a long position trade. Now you see it becomes simple. So whenever you see this kind of condition, you should always hope or you should always take a bullish or a long position. Okay, great. That means you have already ignored the short case or a short position case, right? Okay, the second one. So again, if we are in the second or the third phase and the market is moving up, but this time the price is less than 20-day moving average, then what kind of position you should take? Tell me. Long, short. Okay, I got one answer, waiting for another one. Think about it. Think about it. If we are in the second or the third phase, the market is moving up. Great. Everything is good. The price of Bitcoin is less than 20-day moving average. Okay. So I got two answers. Great. So in this case, see, of course, the condition first is telling you the market is moving up. Great. The condition 2 is telling you that the market is going to move down or the sentiment of the market is bearish. The sentiment of the market is bearish. Okay. See, as someone who is at a beginner stage of trading, you should always avoid those kind of situation where you are unsure about the market. Okay, or where you are confused about the market, or where you are getting a mixed signal from the market. Okay, again, I will tell you the same part. As a beginner trader, or as someone who has very less experience in the crypto market, always, I mean, let's say, do not take a trade when you are confused about the market or where you are getting mixed signals. Okay, So in this case, what we are getting? We are getting, okay, this is a bullish sign. The sentiment is negative. That means we should not take any trade. So ignore, or I can write just no trade. But again, does that mean we can't take a short position here? Okay, does that mean that? No. Of course, the market will go down for a short period of time. Okay, you can take a short position, but the chances of getting a successful short position trade is going to be very less. The probability, okay, of completing a successful short position trade is going to be less in this scenario, in the second scenario. That's what I'm saying. As a beginner trader, you should avoid this kind of situation. As an experienced trader, once you understand what is happening in the market, you will know what you are risking, you will know what you are doing. Okay, you will know what you are doing in this kind of cases. Okay, just 1 second. Okay, so now the third thing, let's say in the fourth phase, the market is moving down, correct? And the price is above the 20-day moving average. Again, okay, right now the phase has changed. Of course, we are in the fourth phase. Okay, and the price of BTC is greater than 20-day moving average. What kind of position you should take, long or short? Tell me. No trade. Yes, absolutely correct. We should not take a trade. Absolutely correct. Okay, there is no trade because again, same logic. The market is saying that the whole market will fall down because we're in the fourth phase, but the sentiment or the price of BTC is greater than 20-day moving average. That implies that the sentiment says bullish. The sentiments are bullish, but not for long, for a short interval of time. Then this kind of scene or scenario again mixed signals. That means no trade. Okay, next topic, next scenario. Fourth phase, market is moving down, but this time the price is less than 20-day moving average. Now what? I think please do give answers if you are thinking about it, please do give answers. Okay. Okay, so in this case, what we are seeing that okay, the overall market, or we are in the fourth phase, of course, the market is going to go down. Great. Okay. The price of BTC is less than 20-day moving average. Okay. That means again bearish. So bearish sign plus bearish sign, that means a short position. Okay. Now this one is going to be a little bit. So we are in the first phase, the market is going sideways. Both things are actually the first phase, the market is going sideways. The price is greater than 20-day moving average. Okay, and here in this case, the price is less than 20-day moving average. Okay. The market is in the accumulation phase, first and foremost. The price of Bitcoin is greater than 20-day moving average. Now, what kind of position you should take? Now, this is you should think about. Think about it. We are in the first market phase, which is basically accumulation phase. We don't take trades in channel. Yes, we don't take trades in channel. Okay, but we are in. You have to think about the phase, first market phase. The market phase does not occur in channel. Of course, it will go up and down. Channels are going to be the very lengthy. For example, let me show you. Right now, this is basically from my point of view, we are still in the accumulation phase. So this is all accumulation phase. Okay, let me show you the previous accumulation phase. So this is all accumulation phase. See, it might not look good, but yeah. So this is all accumulation phase. Okay, you see the difference? Accumulation phase are very long, or the phases are actually very long. Okay, and the channel that we are talking about is going to be something like this. So let's say, if I zoom in, it will be shown something like this in this area. Let's say that will be a channel. Okay, but if you channels are different, this is channel, but this is going to be the accumulation phase. Okay? So the size, there's a very big size difference. But yeah, think about it. Give me an answer. First, first market phase, price is greater than 20-day moving average. What kind of trade you should take? Okay, let me make it simple for you guys. See, we are in the first phase, correct? That means the chances of the market to move up or down is 50-50. Okay, it's simple, very simple probability, 50-50 probability. The market might move up or it might move down. Same logic, 50-50 percentage. Okay, so this is basically true for both of it. So there is, I mean, almost same weightage, you can say, almost same weightage. Now what we have to wait on? We have to think about the sentiment of the market. Very simple. So the weightage is almost same in both the cases. Now we will just think about the sentiment of the market. Okay, the price is greater than the 20-day moving average. Great. We will take a long position. Okay, and of course, if the price is less than 20-day moving average, we will take a short position. Very simple. Now, again, let me tell you why. Because the weightage in these two cases regarding market phases is almost same. So this is basically nullified. Now, what we are thinking is about this part, the sentiment part. That's it. Okay, let me show you what I mean by that. Now you see this is right here. This is all accumulation phase, correct? Here the market went down, the BTC went down. It was below the 20-day moving average. That means we can take a short position. Okay, here it was above the 20-day moving average. The sentiment is positive, bullish. That means we can take a long position. Again, the sentiment becomes negative. We can take a short position. Again, the sentiment becomes positive. We can take a long position. Great. Nothing to be worried about. Okay. But if I do the same thing right here, see, in this case, the market is above the 20-day moving average. Okay. And we are also in the second market cycle. Bullish plus bullish. That means you can take a long position in this area, right? Now, a good example will be something right here. So in this case also again, bullish plus bullish, again, you can take a long position. Now, a good example is something this one. So the market is in the second phase. Again, we are in the second phase. You can clearly see. Let me zoom out. So we are in the second phase. Okay. Right. But the price of Bitcoin is below the 20-day moving average. So first condition, bullish. Second condition, bearish. That means no trade. Okay. For a beginner trader, let me make it very clear. For a beginner trader, there is no trade. But for someone who has experience, they might take a short position right around here. Within 1 or 2 days, they will make quick profit of 5 or 10% and they will exit. So they can take a short position also. Okay? But eventually, you have to understand the market will move up eventually. It did. Correct? That's what I'm trying to say. Again, the same thing I can say right here. See, the market did went down, and this is not a small percentage. It has to be a good percent actually. That's the what? 11% move. 11% is a good move in any market, right? The market did went down below 11%, below 11% from 20-day moving average, correct? Okay, but for a beginner trader, there is no trade in this case. In this area, there is no trade for a beginner trader. But for someone who has some kind of experience, of course, they can take a short position, a quick short position trade, and make a quick money and get out from the market. That's what I'm trying to say. But for suppose in condition like this one, Okay, where the overall market is moving down. Okay? Now, in this case, of course, the market is bearish, so we are in the fourth phase. See this one. We are in the fourth. Yeah, we are in the fourth phase. This one, correct? The price of Bitcoin is greater than 20-day moving average. This condition. Okay, now this is what I'm trying to say in this way. The market is bearish, correct? The price of Bitcoin is above the 20-day moving average. You can take this one also. You can take this one also as an example. Whatever you think, we have 3 examples right here. Okay. Should you take a long position trade or a short position trade? Right. So if you think about it, the overall market is bearish. The sentiment becomes positive, but for a short period of time. After that, what happened next? After a month, market went down again. Because overall, the market should move down because it's what is in the fourth phase. Okay? So in this kind of scenarios, you should just ignore the market as a beginner trader. As someone who has some kind of experience, they can take a quick long position trade and exit from the market. Quick long position trade and exit from the market. Okay. But generally, even the experienced trader, they ignore or they avoid this kind of scenarios. Why? Because the 10% or the 15 or 5% that you are going to make has a lot more risk. For even if I count myself, I generally don't take trades in this kind of areas. Why? Because I mean the risk factor is very high, and as a trader, we try to increase the probability and we try to decrease the risk. Correct? So in this case, both things are going in the opposite direction. The probability of creating a successful trade is less, and the risk of failure is more. So why take chances? Correct? But in the accumulation phase, of course, you can take both trades, positive and negative, so long and short both. Okay. You can, I mean, I think I've already shared my Jamboard with you guys. Let me share it once again if you don't have it. And please, someone share this link, the Jamboard link, in the Telegram group. Let me just keep it to viewing. I'm sharing the Jamboard in the chat, in the Zoom chat. So just copy this link and share it in the Telegram group so everyone has it. How do we know that we are in a first phase? That we have already discussed. If you watch the first or second class, you will know it. Okay, the recording of first or second class, you will know how to identify in which market phase we are in. Okay, I have talked about it in detail. Please refer to that. If you have a question, then of course we can discuss that in the next class. Okay? Because that particular question will take at least 20 to 25 minutes to discuss. Okay, so please refer to the previous recording. Okay. Now that is clear. 20-day moving average is clear. Okay. See, somewhere in the 11th or 12th class, maybe, we will write rules one by one. Okay. Rules basically. So first you have to do that, first you have to do this, okay, this kind of situation. And this 20-day moving average is going to be the second rule. The first rule is going to be market phase, how to identify market phases. That is the first rule. The second rule is going to be the 20-day moving average. Okay, so that's why it is very important. Great. Now the second thing we have here is 20-week moving average. Let me make it very clear. The 20-day moving average is important for swing traders. Okay, this 20-week moving average is important for position traders or for someone who just want to understand where the market is moving. That's okay. But this 20-day moving average, it provides us the sentiment of the market for a short term. So that short term can be 2 week, 3 week, 4 week, something like that. This 20-week moving average provides us the sentiment of the market for a long term. Long term means a year or half a year, okay, 1.5 years, something like that. Now, great. So, how to put a 20-week moving average on Bitcoin chart? It's very simple. Again, this line, this moving average is basically the 20-day moving average, correct? So, if I go on settings, if I change the input and change the time frame from day to week, this becomes the 20-week moving average. Okay, that's it. So this becomes a 20-week moving average. Okay, so the length is 20, the time frame is a week, so this automatically becomes a 20-week moving average. Correct? Okay, so if I zoom out and if I see this thing, now see it very clear. It is very, very clear. Whenever the market is bullish, it is above the 20-week moving average. Correct? Whenever the market is bearish, it is below the 20-week moving average. Correct? Right now, the market is above the 20-week moving average. Here it was ago, of course, above the 20-week moving average. The sentiment was very positive, of course. Here also it is above the 20-week moving average, so the sentiment is very positive still right now also. Okay. And generally what happens whenever a new bull market starts, say in this case, whenever there is a new start of a bull market, we get the support from a 20-week moving average. So this thing in the previous market cycle, or I can say in the starting of the previous market cycle, we got the support of a 20-week moving average. Okay, and I think, of course, I mean, we got two supports right here, but I still believe that the market must take a downtrend, a down move. Okay, and we might see some kind of support from this 20-day moving average, and then the market might move. This is what I'm thinking for the next, within the next 4 to 5 months. Okay, I don't think Bitcoin will move up to 60,000 within the next 4 months. I think it will take a U-turn first. It will create a correction. Okay, and then again it will move. This is what I am expecting because of the 20-week moving average. Okay, so the 20-week moving average, it provides you, or it gives you the sentiment of the market, and also helps you to identify when the next bull market is going to start. Okay, we have 15 minutes left. If you have any questions, start dropping it in the chat, in the Google Meet chat, so I will take it from there. Okay, if not, then of course I will just continue. But yeah, so understood my part, this particular topic, 20-day moving average and 20-week moving average. Let me revise you again whatever we have discussed till now. 20-day moving average and 20-week moving average, both are indicators. Okay, indicators are not a strategy, or they are not a setup basically. Okay, they are part of the setup. In a trading setup, we have two different things. In one trading setup, we have two different things: strategy and indicator. We are talking about the indicator right now. So indicators are not strategy and they are not setup. Okay, you should never buy and sell based on any indicator. Okay, they are only 20% part of trading or your trading setup. Okay, indicators provide you, or it gives you information which you can't see from your naked eyes, which you can't see from the candlestick itself. Okay, they provide that kind of information to you. So right now we are using a 20-day moving average indicator and a 20-week moving average indicator. Both indicators provide you the sentiment of the market. 20-day moving average indicator provides you the sentiment of the market on a lower time interval, let's say for a 2-week or a 5-week, something like that. The 20-week moving average indicator provides the sentiment of the market on a larger time frame, so maybe a year or 1.5 years, something like that. That we discussed, and we have also discussed how to use it based on this moving average, or based on our 20-day moving average and based on our market phases, what kind of position you should take in the trade or while trading, what kind of position you should take based on these two parts. Okay, this is very, 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 very important thing. Okay? Because it just see this information, it helps you to create a fixed mind. Whenever you're taking a trade, you have fixed in mind. Okay, this condition, the moving average is moving up. I should only look for the long position. Okay. For example, right? Let me show you. Let me show you the chart near this one. See this particular one. Okay, this particular thing right here and this particular thing. Okay, this is a channel, right? A downward channel, correct? On a downward channel, generally you look for a short position, correct? I told you in a downward channel, generally you look for a short position. Okay, but in this case, right here, the BTC or Bitcoin was above the 20-day moving average. That means if we saw broken, I mean, see, this channel is broken, then you could have taken a long position. And from this point, you can clearly see the market moved up. Boom. From 2.5 to 4.5. I mean, let's say even if you took a half the trade, half of it, even let's say till here, that's a 50% move. That's an insane move of 50%. Okay. It happens why? Or it helps you understand why? Because now you understand this topic. Once you understand this particular part, it becomes very easy for you. Even right now, the Bitcoin is above the 20-day moving average. Right now, the Bitcoin is above the 20-day moving average. That means everything is positive. See, even everything is moving up. Correct? Why? Because BTC is above the 20-day moving average. But if in the next 2-3 days, in the next week, if BTC goes down like this, and the moving average goes down like this, right? Then mark my words, the overall market, not just 1 or 2 points, the overall market will move down. Why? Because now BTC is properly below the 20-day moving average. But you can say, but yes, see this part also. Here also the market went down. Right? Here also the market went below the 20-day moving average, correct? But look at on a 1-day chart. Whenever we talk about this particular topic, you have to make sure you have the definite point. We can't accept everything in this case. So we can't accept this one. Why? Because the candlestick did not. We need something like this. Let me show you. We need something like this. Okay. And a candlestick, maybe here it is. Yeah. Ghost one. Something like this. Okay. It has to be something like this. Okay. A proper rejection from 20-day moving average. That will be a good thing for us. If we get a rejection from a 20-day moving average, that's great. Okay. A proper rejection from a 20-day moving average, then it will be a good part. We need something like this. Okay. Once we get this kind of situation, believe me, every coin will start moving in downward direction automatically, because everything will be bearish at that point of time. Okay. Again, the next topic, let's talk about it, because we do have time and we are still talking about the 20 or moving averages. So the next one is a 200-week moving average. Now, 200-week moving average is not that much important for traders, but let me explain it to you. So see, I have changed the length to 200. I have changed the time frame to 1 week. Okay, and I'm just clicking on this part. And let me go on a weekly chart. Not this chart. I need to use a bit stem chart to make more sense. Yeah, say this one. And let me use a log scale. I mean, you don't have to understand everything what I'm trying to say right now, but if you do, then it's great because this is important for investment. Yeah, see. So this blue line, what you can see on the screen is what we call a 20-week moving average. Okay, and in the last, see, from 2008 to till now, actually to 2022. Okay, this this 200-week moving average, it was supporting the price of Bitcoin very well. Okay, it was supporting the price of Bitcoin in a very good sense. So whenever the price touches this particular level, the market starts moving up. You see this thing. So even in the accumulation phase, this was the minimum for Bitcoin. This 200-week moving average was the minimum for Bitcoin, even in the accumulation phase. Okay, even if you see in 2018 and 20, same logic. See, even in the, see, this was COVID. This whole drop was just around COVID, starting of COVID, right? Even at that point, who supported the market? The 200 weeks moving average supported the market. Okay, and this time what happened? The market did break. Let me be very clear. The market did break the 200-week moving average. Okay, and it went down. And believe me, that was the best time to invest in Bitcoin. If when the price of BTC was below 200-week moving average, that was the best time to invest in any cryptocurrency. I mean, I'm just not even talking about just Bitcoin, but in any cryptocurrency you could have invested in. Okay, but this is 200-week moving average. 200-week moving average is not that much important for a trader, but it is important for an investor. Okay, again, 200-day moving average, it is important for a trader. 200-week moving average, it is important for someone who wants, I mean, it is important for trader, also for investor, for both. Okay, and the last one is a 200-week moving average. This is important for only for investors. Only for investors. That's it. It is for both. And this one is only for traders. Okay. So understand this part. What you guys can do is please do watch the recording of previous sessions. And of course, if you have any question, please drop it in the chat. I will take it from there. If not, then of course we can conclude this class. If you will see, we have completed many topics till now. So please make sure to revise those topics, to practice something, go on TradingView, analyze some charts, share it in the Telegram group. Okay, let me know, tag me, okay, in the Telegram group itself, so I can check those charts. Okay, it will help you guys actually. Okay. Now, in the next class, we will talk about the base breaking strategy. Something new, you will understand the base breaking strategy. And if we have some time, then we will also talk about golden cross and death cross, which is also a very interesting thing. Okay. But in the next class, we will talk about base breaking strategy and golden cross and death cross. Great. Any question that you have for me, please let me know if you have any question. People are still joining. We are at the end of the class and people are still joining. No worries. Any kind of question, anyone? Today you were very clear. Thank you. Thank you. Thank you. Okay. Just analyze the market. Just look at the market. See what Bitcoin is doing. Okay, draw means see even right now you can draw some kind of support and resistance here. You can see where the market is moving. Okay, check different charts, work on different charts. That is always beneficial. Uh, check Solana and any other coin. That's also good. Okay. Yeah. So let's conclude this class. The next class is going to be on. I think it is on Monday itself. One second. Let me check. We have changed the schedule of the classes. So yeah. So now from now onwards, our classes will be on Monday and Thursday. So the next class will be on Monday. So you have sufficient time. Okay. You have at least three days. Okay. What about Beam? What about Beam? Beam, you mean to say Beam coin? Beam coin. Okay, Beam coin. Let's see. I don't know. I mean, I don't know the fundamental of it. BeamX. This one. Okay, BeamX. What about the Beam coin? Let's see. That's a very new coin on on Binance. That's a very new coin. So if you see something like this, first and foremost, this coin is not good for trading for a beginner. Okay. Again, I'm telling you why, because it's a very, I mean, it has very less history. It is a very new coin. But once you see that, then you should go on Coin Market Cap. If you see, you should find out if it's here or not. By the way, this Beam coin, BeamX, Beam. This is Beam, right? Yeah, it is on Binance also. So this is the Beam. And if I click on all, okay, that's a very new coin. It was launched right around here. Uh, to be honest, I mean, we have to read about it. What kind of work it is doing. So that comes under the fundamental part. It's a gaming platform, I believe. If it's an ecosystem where gamers and developers come together to shape the future of gaming industry. Okay. I mean, if you're talking about trading, I will tell you to stay away from it because it's very new. If you talk about investment, that's a different thing. So in these classes, we don't talk about the investment part generally. Okay. But yeah, if you want to trade it, then stay away from it because it's a very new coin. Okay. We already have so many coins in the market, so just stay away from this coin for now. It might look very tempting actually because it went from like what from year to year. That's already 300 times percentage, but it's very high volatility coin, high risky coin. But yeah, okay. Thank you everyone. Thank you for your time. Thank you for attending these sessions. Let's meet on the next Monday. And I hope you found this class informative and useful as always. Okay, thank you everyone for joining. Thank you.